Hello folks, you're welcome to this particular video. We're going to be looking at directional bias. It's very important we know the directional bias so that we can know where we are actually trading from or towards. I am starting with this weekly time frame for AUD USD. The basic point I'm trying to pass across in this video is one way you can determine the direction to trade from is by identifying two things, and it's all based on liquidity. Okay, where the market trades towards liquidity, the buy side liquidity and the sell side liquidity. Okay, in this case, we're actually in a downtrend. I mean, the market is in a downtrend. All right, so the first thing we need to do is to identify a manipulation. Secondly, we identify a target. In the case of a downtrend, the manipulation is going to be sweeping the buy side liquidity, while the target is going to be the sell side liquidity, which is going to be the weak low, as in this case. All right. So if you look at this, we identified a manipulation here by this candle, and then we identify a potential target. Once those are identified, what you need to do is to expect that the market will be going downwards. Okay, so after this weekly candle forms, you will expect that the following week is going to be bearish, and then subsequent weeks are going to be bearish until we are able to clear the sell side liquidity. Okay, when the sell side liquidity is cleared, we also try to identify a manipulation. You see market traded downwards, clear the liquidity existing below this low, the sell side liquidity, and you can see this particular candle, this particular week, closing above this low. That means manipulation has been completed, right? As you can see. And then we expect the next candle to be bullish until we get to this imbalance, okay, and the premium zone of this particular range. Okay, this particular range, trading range, is about the premium zone. So this imbalance or this fair value gap you see is actually a draw on liquidity. It's going to attract price into this imbalance or this fair value gap. Okay, and what did we notice after price was drawn into the imbalance? Okay, we noticed again a manipulation, and once you notice this manipulation by this particular candle, this candle traded above this high and then closed below it. That's typical of a manipulation, and we identify this target, which is going to be our weak low. Okay, so when those are identified once again, we continue to look at the next weekly candle to be, we expect the next weekly candle to be what? To be bearish, bearish, bearish until we clear the sell side liquidity. And once again, we have this manipulation by this candle. Okay, we expect the next candle to be what? Bullish, When we identify this manipulation, we identify um, an imbalance into this premium zone here. You can see an imbalance. So this is actually a draw on liquidity. Identify the imbalance. We expect price to be drawn towards this imbalance. So we can start seeing higher pricing. Okay, bullish wick, bullish wick. You know, we expect more of the up close candle until this um, until this is fulfilled. Okay, the imbalance was almost completely filled, unlike in this case. And once we saw this manipulation as a result of this candle closing below this, then we can look at this target and start expecting price to trade lower. Okay, and we can also notice very clear manipulation here, very nice manipulation. Market traded above and closed below it. So we can expect this candle to be bearish, bearish, and bearish, and so on and so forth. Okay. Now, when you know or when you expect a down close candle, for instance, for the weekly time frame, then as a day trader, for instance, you can expect that that week is going to be a bearish week. So you approach each day looking for opportunity to go short. Okay. Now, this is the daily time frame. Whatever is applied to the weekly time frame can also be applied to the daily time frame as we have. You can see once again we have manipulation and we have a potential target, and we are combining the S and D zones as added confluence. This is a zone actually that has not been mitigated. So price actually mitigated this zone and closed and took out this low, this short-term low. And when that is done, we expect price to trade. The expectation order flow is for price to retrace to the premium of this particular range. And when that is done, we can notice a manipulation here. Look at this target, look at this manipulation. Price traded above this and closed below this. So we expect more candle to trade below in order to clear this target that is here. So once again, you find the manipulation after this retracement. You find this manipulation. This is the target we are looking at. You find this manipulation, and after this candle, we start expecting bearish days or down close days. Okay, until we're supposed to take out this low. One thing I would like to share here is most times when the market is very close to target, we usually have this kind of retracement. Okay, and those of us who want to um, enter a trade just because we believe that the target will be hit, we have to be very, very careful. I'm sorry about that noise, please. We have to be very, very careful because market can most times do this very close to the target. You will see this kind of retracement. Okay, when this retracement took place, all we need to do is to look for a manipulation and supported by this supply zone, and then we take price to clear this particular target. Okay, now we just want to look at how we can actually trade with this, or how I don't know if the concept resonates with your trading style. Back test and see if you can make use of it. So the first thing we are kind of taking note of here is that price manipulated the highs, okay, with this candle, and we also identify the target below. Okay, after this manipulation, We identify target below. We can also notice that we have a fair value gap here. Okay, the price traded into for this manipulation. Those are added confluences. Then that implies that we expect down close days until this target is met. So we expect the market to be trading lower until we take out this low. Or at least we expect the next daily candle to be bearish. As a day trader, you just focus on the next day. Let's see. Uh, Focusing on the next day, we are going to use this candle's high as a strong high. That means we don't expect price to trade above it. And this open price, this close price is also very important as we are going to, um, as the open price, as the close price here is most times going to be equivalent to the open price of the next day. Okay. Um, then, like I said, we mark the strong high and the close, and we switched, for instance, to a lower time frame to the M15 lower time frame. Taking note of this marking strong high, close, and target. So that's where we are. This is where the market closed for that week, for that day, sorry. So we have the strong high, the close, and the target. So we're expecting market to do this, to trade above, then take out the lows. Okay. So like what we call the manipulation, expecting market to do manipulation here before taking that this low. So we have this accumulation here, then we have manipulation, then this distribution to take out this low. That's what we refer to as the power of three, the ICT power of three, and we'll also might refer to as the AMD cycle: accumulation, manipulation, and distribution. It is actually a concept that is derived from the nature of candle formation. Most times, if we have a bearish candle and we want to have the next bearish candle, you can always see that at the open market, we tend to trade, a little bit above before actually expanding lower. So we're going to use that concept after the close that is here. Okay, we expect market to do what? To trade above. Okay, slightly above, then finally before taking out this target. Okay, so we may expect price to trade upwards initially before expanding lower. We expect price not to break the strong high. So when that is taking place, we don't expect this strong high to be violated. We might also look to take partials at the previous daily low. Okay, so when you are trading based as a day trader, the previous daily low is very, very cute for us to take partials or even for us to, you know, target as our final TP. Okay, so continue. So this is what we have. This is where the candle for the previous day closed initially, and this is the previous day low. Okay, now we see our market actually traded above this, and of course we don't expect price to clear the strong high, and this is what price did. You can see a very nice manipulation taking place. First of all, we have this manipulation, and then the market did another manipulation, possibly could be reacting from a supply around here. That could be the possibility. Before we have this short-term low created, then we have a break of structure. We have this very fine supply zone. The market rallied downwards and then rallied to mitigate the zone. And then we have a beautiful trade targeting this previous daily low. So this is the 5 minutes time frame. We identify the manipulation. Okay, the same thing. Identify manipulation, then identify the target. Okay, so once you see this very clear manipulation here, You might miss this trade first of all, you might miss it, but then you might miss it. But when you see this very clear one, this clear manipulation here, okay, second time, nothing wrong if you miss this trade or if you recorded a loss in this trade, but this one is going to be a wonderful one afterwards. So we identified the S&D zones and we set our limit and target. So this is just the first day after knowing that market is going to trade um, lower. So this is just the first day. Okay. So that's how you're going to do. Look for opportunities, continue to look for manipulation, and then target for the subsequent days. If you are that kind of swing trader, so you can just look to take the final target, which was actually this target. Okay, by the time you enter here, you can hold your trade, manage your trade until your final target is hit, just like this. Okay, so this is what we have. All right, thank you, and I hope you derive some value or some enlightenment from this video. Once again, thanks for being there.